If you don't have Demat account for trading, find the link in the description to open a new account in Zerodha. Myths of how to draw support and resistance levels. 1. Finding right placement. Remember, support and resistance levels are zones, not just lines, so spending time on their right placement is useless. It is impossible to draw a perfect line in the sand. Also, SR lines tends to move some pips as market moves because the very recent touch of those lines would not be exactly the same as the previous one. People moves the market, not machines. That is why looking for right placement and spending too much time on perfecting your line is useless. 2. Shadows/wicks. Another myth is that you should only consider shadows of candles and not real bodies when drawing those levels. If a real body is breaking a level just by some pips, known as false break, it is not a valid level anymore. 3. Valid level. You should not draw a line every level you see on your chart. Not every level can be called in support and resistance lines. If you do that, then your chart will be full of lines and it will become impossible for you to trade. Drawing lines everywhere in your chart will complex your trading, so only consider valid levels when drawing SR levels. How to draw support and resistance level. There are 3 golden rules to draw support and resistance lines professionally. 1. Identify a proper rejection. Before drawing SR levels, identify proper rejection in your chart. Remember, not all rejections can be qualified to mark as valid SR levels. There are certain rejections more powerful than others. There are 2 characteristics of a proper/valid rejection. 1. It will spend more time in that direction. Longer the market keeps trading in a direction, the stronger the rejection would be. If market is spending more time in one direction, it is a strong level and can be marked as proper rejection. 2. It will cover more distance in that direction. More distance market covered in one direction, the stronger the rejection will be. Distance is the key. If a rejection is covering more distance in less time, it can also be marked as a valid or even stronger rejection. Longer the rejection, stronger the support and resistance line would be, and lesser the distance of a rejection, the weakest the level would be. 2. More rejections, more stronger level. Once you identified a proper rejection, then look for more rejections and draw your level in such a manner to include more and more rejections, including tiny ones. More rejections you get, the stronger the level will be, and once price retraces to your level, you can get a high probability trade signal there. Once you identified 2 proper rejections in your level, you can take a trade on third touch. You should have at least 2 proper rejections in your level before you start taking trades. 3. Very recent rejections are important. By recent rejection, I mean very last rejection in your level. Once your level is complete, and after that you waits for price to react your level to take a trade. When you draw SR levels, always try to put your level as close as possible to recent rejection, because more often market reacts close to recent rejection only and then turns back up, so you can get behind or miss a fantastic opportunity to trade just because your level is not close to recent rejection and you was waiting for market to move some pips further to get enter. Support and resistance in uptrend market. Support and resistance are proven areas where buyers and sellers find some of equilibrium. They are major turning points in the market. Support and resistance levels are formed when price reverses and change direction, and price will often respect these support and resistance levels. In other words, they tend to contain price movement until, of course, price breaks through them. In trending markets, support and resistance are formed from swing points. In an uptrend, the previous swing point acts as a support level, and in a downtrend, the old swing point acts as a resistance level. When the market makes the retracement move, it respects the previous swing point, support level, which will represent the beginning of another impulsive move. As you can see, when the market tests the previous swing point, support level, it goes up again. By drawing a support level in an uptrend market, we can predict when the next impulsive move will take place.